أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم. Dear viewers, elders, brothers and sisters, and students, Assalamu alaikum wa rahmatullahi wa barakatuh. Today this is a short video for the upcoming video which I have already recorded and I will upload it after this video for the most important part of the accounting on the basis of which you can learn how to enter the business transaction into journal entries, then how to separate each account in the shape of ledger accounts, then how to transfer the total of each account to the debited side of the trial balance and credited side of the trial balance, in on the basis of this trial balance, how to prepare the financial report, which consists of the number one, profit and loss sheet, and number two, balance sheet. I will teach you each of this in my upcoming video. So let's have a slight information about this, why increase in assets is recorded debited and also expenses debited, and decrease is recorded as credits. Yes, anything for your better understanding, this is a best way to teach you. Comes debited, goes or decreases credited. So increase in cash or assets, even current assets or non-current assets, they are recorded debit. We receive them, they comes to us, that's why recorded as debit. In the same way, expenses come to us even in the middle of from the start of the month up to end of the month. For example, rental expenses, vehicle expenses, fuel expenses, utilities expenses, and purchase of goods and so on. And decrease is recorded as credit. For example, I'm selling groceries. Groceries are current assets. So when I sell on a daily basis, for example, I sold vegetables, the cleaning items like toilet papers, the kitchen tools, the kitchen items, or tools, the foods, the chips, and so on. When I sell them on daily basis, and the groceries are decreasing, and that's why we record it as a credit. But in exchange of it, we receive cash, which increases to us. That's recorded as the debit. So this is the way. And liabilities, owner's equity, and revenue. These are, remember, all those three accounts which when we receive from somebody, it's not in our own. We receive it. Liabilities means when I have, for example, I receive a loan from a bank or from a financial firm about 50,000, and I have to pay this back, this 50,000 within an year. That's why I'm liable to pay. So a loan increased to me. For other in other things, the I don't know what do I say for this, but just remember $50,000 cash I received. I am when cash is received, increase my cash, but I'm liable to pay back. So increase in liability is recorded as credit. When after 1 year I paid the amount of loan which I have received from the bank and paid back 50,000, that's recorded as debit. I'm no more liable to pay this. In the same way, owner equity, when I receive any amount from the some person as a partner in the business, there are three types of partnership. Or one is called owner proprietorship. Proprietorship. That's one person is responsible for every kind of things, for receivables, for payables, for debited amounts, credited amounts, anything. The second one is the partnership, in which from 2% up to 20% can participate for a business, for anything. And at the end of each year, they have to, or end of each month, or maybe quarterly, semi-annual, or annually, they have to decide to how much, what is the profit and what is the loss, and do we continue or not continue. In the same way, revenue, when in our sole proprietorship, one person has to receive his revenue. Revenue means the profit made by the business, and the partnership person from 2 to 20%, they have to receive their revenue on the base of their percentage of amount. And in corporation, that's a franchise system, like such as KFC, McDonald's, Walmart, Aldi, and so on. They are the franchise. At the end of each year, they have to calculate their revenue and divide it between their franchises. This is all about the video of the rules of debit and credit, a slight information to you. And in this, I will teach you each one illustration. This is for the assets. The other one is for the expensive. This is expensive. And this, the third one is for the liabilities, and the fourth one is for the owner's equity, and the last and fifth one is for the revenue. I have explained each part of it in each video. I will teach you these things or everything. So that was today's video with this information video. Please click to see the explain of each part of the debit, rule of debit and credit. This one. So you click on the link below, and you will be able to see the sorry for this detailed video of debit, rule of debit and credit. Thank you very much for watching my video. Don't forget to view, share my video with your friends, your family members, with your colleagues, with your with your class fellows, with those who have a problem or issue while entering the business transactions into journal entries, ledger accounts, trial balances, adjusted trial balances, financial report, which consists of profit and loss sheet and balance sheet. You will be able to solve these questions, or if you're working as accountant or account officer, you will be able to enter the daily transactions chronologically in the financial books of account or double entry system in QuickBooks and so on. Thank you very much for watching my video. Again, don't forget to view, share, subscribe, and click on the bell icon that I will be able to see my further videos. Thank you very much for watching my video. See you in my next video. I have given the link in the bottom. Click on that and you will be able to see my full video. If you have any question regarding rules of debit and credit or any issue, write down for me and comment. I will answer your question, but that should be according to the topic, no out of the topic. Thank you very much.